What is happening is that Indian equity markets, all the retail, I mean, we have very large retail crowd, 1.4 billion people. So at least 500, 700 million people can technically participate should participate in the market at a small or big level. So actually, till 2020, there were only 40 million people who had account only to trade or buy shares. Then comes COVID, everything becomes digital, thanks to Jio and everything. And the digital onboarding starts in 5 minutes. We start getting, instead of 3 lakh accounts, we start getting 4 million accounts per month. Right. From 20 till date, last month was 4.2 million. We have gone from 40 million to 171 million. Right. And I think we are headed very quickly to go to maybe 300 million and 500 million. So that brings a lot of very predictable local flow. And that's the source of the bull market.
So I would have been okay had the local flow been driven by long-term retail investors.
Yes.
What's happening is retail investors are turning to trading. And anecdotal evidence tells me that, you have promoter-owned companies, their children, rather than joining the family business, are actually getting into the stock market because they're like, it's better to trade and make money on a daily basis. Bollywood celebrities are getting into the stock market. So isn't it getting a bit much?
Yeah, see, whenever this kind of thing happens, there will be excesses at the margin. But right now, excesses are at the margin. And things are actually going right across, right to the shoeshine boy, drivers, conductors. They are also participating. They have the right to participate. But see, markets are pricey. Bull run is in full swing. Will it become bigger? I think it will become much bigger. Because world has not participated. FIs are not participated. FI passive has participated. All the actives, they are sitting on the fence saying that market is expensive. Market is pricey. I would not say expensive, very expensive, but it's kind of pricey. But it is once in a lifetime opportunity to invest in India. Because what this equity flow will do, Indian development, Indian entrepreneurs, for 70 years, they didn't get enough equity capital. Now they are getting more than what they can actually absorb. So this flow of equity, see, right now there will be a flood. Then after the flood, there will be a massive, a resurgence of Indian entrepreneurship. So what probably market in the longer run is optimistic about is the resurgence of entrepreneurship. But right now it looks to be like a irrational bull run. And let me tell you always, the bull run in any market, the wild bull run is always irrational. So is the depth of bear market. That is also irrational. So we are into, like in China, what is happening in last 2-3 years and what we saw 2-3 days back was the bottom of the depth of pessimism. And in India, we are climbing every 15 days we are climbing 1,000 points. So we are on the optimistic side, they are on the pessimistic side. But both of them, they have also done their pessimism or irrational pessimism. I think we are heading towards irrational exuberance in Indian markets.
But you're telling me, and if I could just quote your own words, just before the interview you told me that right now we are at 25,000 for the Nifty. You're saying by 2030 we'll be at 50,000?
Logically we should be there, but maybe we will make it even earlier. Because the pace at, how means, see, you and me cannot control where the market is headed. My saying or not saying.
You're projecting
why I'm saying
doubling
this.
Of the stock market from here.
Yes, for last 45 years it has been doubling every 5 years. For last 45 years. There is always some, it doesn't happen at a 15% compounded every year. There is no year when market would have gone up by 15%. But you do from 1980 till date, it is 15%. Okay? So I am saying that most likely, see, 5-year doubler is say 90% done, 80% done. 4 times in 10 years is like 95% probability. And 16 times in 20 years is like, I would say 99.5%. But if you say next year will it be 15%, I have no idea.
But